Yesterday, as we were discussing, there is an area that I needed to expound, which I felt after that we will need to do it practically. And this afternoon, I've decided I will dig deeper into that specific area, the area of practical tax as accountants are concerned. Now, I wanted to explain something concerning tax that us as accountants, we need to be able to understand. Once one has gotten an appointment letter as an accountant, what happens during the time of interview, sometimes we are not told how the company is operating. Sometimes we are not told whether the company is profit-making or it's not making profits. At times during the interview, we are not even told the taxes that the company is supposed to comply. So as an accountant, you get your appointment letter, and the appointment letter states when you are supposed to report, and you report. So one of the mistakes that us as accountants do is that we inherit sins that were committed by previous accountants, and we do not address them on time. So what happens is when now issues come up, we get reprimanded for things that we were not party to. And specifically, these issues are issues of tax. So today I wanted us to go back and ask ourselves as accountants, we have been hired, we have reported to our employer, where do we start from? Now, there are issues that accountants must bear in mind. Number one, the accountant must understand the tax that the employer is subject to, that the employer is supposed to comply. And number two, the accountant must be able to understand when the employer is supposed to comply to these taxes. So the question becomes, where do you start from? Now, it is expected as an accountant when you report, during your initial days of reporting, as a smart accountant, you are supposed to look into the iTax of the client to check his tax status as number one thing. One, it will be able to help you understand the taxes that you will be filing. Number two, it will help you to understand if we have any tax liabilities that were not yet sorted. And this is critical because it's possible that the accountant who left never informed the directors about the tax liability, especially if they concerned late filing. Or two, the owners of the company understand this liability, but they want to keep quiet to assess and see whether you are competent enough. So as an accountant, when you report, this is something that must be in your mind. You have to know the taxes so that you know where you begin from. And number two, it should be in your mind that if the directors are not aware, then when you raise them to the directors, you will exonerate yourself from any future issues that will come up concerning this liability. Number three, if the directors are quiet and they are not telling you that you have liabilities, they want to assess your competence and see, even before you start, are you going to execute what is needed? Are you competent enough? And then there is also a concept that is attached to that. When you dig deeper into the tax status of your employer and you realize we have tax liabilities, chronic tax liabilities that were not settled, and some are even basic, for example, statutory, then it should also come into your mind immediately that your employer has a solvency issue. So as you work, then you must know that you have been able to detect there is a solvency issue as your employer is concerned. This happens in many scenarios where you change from employment A to employment B. thinking you have landed into greener pastures, only to realize that you never landed into greener pastures. The pastures where you landed in are red. So this will be one of the indicators. Then there are also other aspects. Us as accountants, to survive at our workplaces, it is not just competency. Other issues come up. How do you manage relationship? So this area of starting to understand the tax liability of the client will help you be able to understand how to navigate about relationships between you and your bosses. Now, where do you start from? The first step as an accountant that you are expected to do is to be able to get the last PIN certificate. Once you access the PIN certificate of your employer, it will give you two things. Number one, the PIN certificate will be able to give you the end of the financial year. And number two, the PIN certificate will be able to tell you all the tax obligations that your employer is subject to. Now, at times, you can ask the people that you have met at workplace to be able to give you a PIN certificate. But as a smart accountant, you do not need even to ask anybody. The only thing you will need to ask on your day of reporting is to be given the PIN of the company and the login password. That is the genesis of you being able to understand all the tax positions of your employer. And in this case, I will use a hypothetical example. I will log into the iTax, be able to extract a PIN as all of us are seeing, so that we can be able to see what I'm talking about. Now, here I am. I'm assuming I'm the accountant of this particular client. I'm needed to have the PIN of this client. So what I'll do, I'll look for the PIN. And then I will key in and then I will be requested to put in my I'm being asked to have my valid PIN, which is P051, P052, P052, 062, 264V. Then I'll be able to log in. They will ask me for my password. 550. Then I will need to compute these calculations. If I'm not comfortable, I look for a comfortable one. Then I will complete it as 154. Then I will log in. So friends, now I have logged in into the iTax of this specific employer. I want to know, where do I start from? I have said you need to access the PIN of the specific employer. Go to registration and console reprint the PIN certificate. Once you reprint the PIN certificate, the system will ask you whether it's an agent or the taxpayer. Pick the taxpayer and download the PIN. This PIN that you download, save it somewhere and open. In my case, The PIN is somewhere here. So when you open this PIN, it will give you two things that you will need to know. Number one, the end of the financial year. And number two, it will also help you to know the tax obligation. For this matter, this specific taxpayer now my PIN is open. So what do? I need to understand the end of the financial year. When I look at my income tax, it's telling me it's on 19th of October 2021. And number two, it's giving me the three tax obligations that my employer is subject to. Number one, my employer is subject to pay as you earn. Number two, my employer is supposed to be filing VAT. And number three, my employer is also supposed to file for the income tax at the end of the year. So I have known the end of the financial year. So when it comes to filing tax, I know when I need to file. And I know, as I have been employed and have reported, the taxes that I need to file are these three. After I have known these two issues, where do I start from? Where do I start from? First thing that I need to understand is, am I able to understand the historical tax positions of my employer? I must be able to know. If I do not understand, then if there is an issue, I will be held liable because I'm the accountant. So looking for a way to log in. Now, having been able to understand when is the financial year and the tax obligation that my employer is subject to, then before I do anything, I need to sit down and ask myself, are these people clean as income tax is concerned? Are these people then clean as pay as you earn is concerned? Are these people clean as far as VAT is concerned? Once I realize they are clean, then I can move on. Once I realize they are not clean, then I have a discussion I need to make with my employer to be given the way forward. So what do? I have a responsibility to navigate within the iTax platform of my employer to know the status. So therefore, as an accountant, I'm expected to go to returns. Remember, at this point, you have not filed any return. So I'm expected to go to return and view my filed returns. The system will ask me to select which obligation do I want to view. Do I want withholding tax? Do I want pay as you earn? Do I want VAT? Or do I want the income tax? It's up to me to pick which part I need and I view. For instance, let me just select one. If I select, for example, VAT, and I consult, the system will ask me if I want to view. Once I say I want to view, then I will be able to see all the returns that have been filed. I'll be able to see all the returns that have been filed and the date of filing. At this point, my tax knowledge is needed to know, have I filed on time or have not filed on time? This will be able to give me an opportunity to have a deeper understanding of the tax position of my employer way before I do anything else. So once I've understood the tax position of my employer, then I can be able to know, should I start to file the taxes or no? So this will help you as an accountant. If there is a historical tax issue, it will not affect you because you will report it prior to commencement. If there is no historical tax issue, well and good, you are good to go. You can start your journey moving forward. At this point, is there any question or I can proceed? If there is any question, kindly you can just type. I respond to it as I proceed on. Now, having understood the tax position of my employer, then I am supposed to file my returns. Remember, as a student of RCM and having done tax, you know when VAT is supposed to be filed. If, for example, my employer is also having rental income, then you need to know when rental income is supposed to be filed. If, for example, my employer is subject to turnover tax, then you need to know when this turnover tax needs to be filed. Way from RCM knowledge of CPA. So here now we have come to actualize the theoretical knowledge that we've received into really filing. In this case, my employer is only subject to 3 obligations: income tax, pay as you earn, and VAT. So where we were yesterday, we were at a point where we were discussing about filing VAT. And that's why I said, due to the complexity of the information that we are having, and the information that is needed to be inbuilt into our tax return, then us as accountants, when we are seated, we need to ask ourselves, how can we make our life very easy when it comes to filing value-added tax? And that's why I said that we have come up with these 2 templates called CSV, one for purchases and another one for sale. So that tells me, if, for example, I want to deal with purchases and I have this document, then I'm good to go. The only thing I need to do every day, I need to be filling in this information. I know column A, it's the specific customer who is local. Column B requires the PIN. Column C requires the name of the person I've bought from. Column D needs the date of the invoice. Column E requires the CU invoice number, and column F needs the nature of the transaction. Remember, in this template, column G is empty. It's H that is carrying the amount exclusive of VAT. This is a standard way. Why is it a standard way? Because the return has been structured into this format. So I need another tool where on a daily basis I can be filling in my information. For example, this information could be maybe for the first day. The second day, I could come here and still say I have a local sale. Then I'll be able to put in my PIN. This PIN will even be different. When you check, this is an Excel spreadsheet. Maybe assume now this is, for example, for you as the PIN of the customer. I will put in the name of my client. I'll be able to put in the date, assume it is 25th of February 2023. Then I'll be able to put in the CU invoice number. Now, the CU invoice number depends on my configuration of my invoice. This, for example, is a configuration based on having generated from the iTax. But those that are being pulled directly from the ETR would have a different configuration. So critical, when I'm putting in my data, I must make sure that it is accurate. Now, if you do this thing on a daily basis, it will save you the hassles of typing this information into the return when you want to file the return. And that's why I was saying yesterday, at the point of filing return, you'll realize that as an accountant, you are too busy. At times, you do not have time. And depending on the nature of your employer, if your employer, for example, is trading every day in thousands of invoices, then you have a problem. He will require at the end of the month you file VAT. So if you do not plan yourself well, then you will reach on 20th, you still have thousands of invoices you need to file and you do not have time. So now a mechanism has been devised, completing this on a daily basis. This will be able to help you minimize on time. Why? This will just be uploaded automatically. So we have a CSV for purchases, and at the same time, we also have a CSV for sales. Both of them have been structured separately, but to conform to the way the return is structured. Let me just open the CSV, and you see how the CSV for sales is. Now, there is a challenge on my column E. Why am I saying there is a challenge? Because when you look at the configuration of our CU invoice number, our CU invoice numbers are many. They are almost 11 digits. Now, 11 digits, when you key into this Excel CSV, as they are, when you save, then they normally lose the format automatically. They lose the format automatically. So what do we do as accountants? Because of time, then what we do, we key in. Maybe this one could be like 8. But this 8, you see, when you just leave it like this, when you open, you realize 8 has disappeared. So what people do, what accountants do, you can put 8 and you can put this comma. So you hold this digit to remain the way it is. Same with this one. If you put in 7, it loses. But once you put in 7 and you insert a comma, then you hold it constant. Now here, you are good to go. You can be able to file it the way it is. But as you file, you need to remember one thing, that you had put a comma for the purposes of holding digit 8 and also holding digit 7. So you must go into the return and remove the comma. Otherwise, the return will also read the comma as part of the CU invoice number. Number 2, when you look at column D, the format of my date is 01/05/2023. There are circumstances when an accountant types in this and the 0 vanishes, so that it's just 1/5/2023. So you need to go into the return, amend into 2 digits in every space. Now with this, I can be able to save. Assume these are the only ones that I've had for this specific month, I can be able to save. Now, having done this, I'm good to go. So Yanga is asking, you could change the number format, Mwalimu, on Excel. I don't really understand what you're talking about. But once I understand, then I'll be able to respond. Now, if I have now my return, I have my 3 documents. I have my sales into CSV. I have my purchases into CSV, and I need now to go and file my return. What do? I have already downloaded my return. Here I am. I've gone into the iTax. I have downloaded the return. the return will ask me to put in this information of identification. Once I'm done with putting in the information of identification, then the return asks me to go, which we normally call the basic information. The return will ask me to be able to fill in my general cells. And let me tell you, friends, when it comes to this place, you normally put here the PIN, the nature of the PIN, and the nature of the PIN is original. Remember, you have the option of picking original or you have the option of picking amended. I can only pick an amended if at all I have already filed the return for that specific month and I want to amend it. Then I can pick amended. Otherwise, I will pick original if I'm filing it for the first time. Once I complete this section, I'm expected, this is my area of interest so much. I'm expected now to complete my general cells. So what I was saying is, friends, I have been able to put my CSV on a daily basis. On a daily basis, I've been filling my CSV. So what do? I come when I want to file, and I just go to import my CSV, and then I go look for where my document is, which was my CSV cells. I found it is here, and then I be able to open. When I open, then the return, because I configured my CSV based on how the return is, then the return will be, the CSV will upload itself automatically to my return. But as I've said, there are two corrections that I must be very vigilant to make. Number one, look at my CU invoice number. I'm having 8, but there is a comma. So I should remember to remove the comma. On this one, I'm having 7, but there's a comma. I should remember to remove a comma so that this CU invoice number is the exact one that is known at KRA. Otherwise, it will be interpreted, the comma will be interpreted to be part of it. Number 2, be cautious with the dates. If at all the dates are having 1 digit in every column, always make them 2 digits. Siyanga is saying, instead of apostrophe, you can also change the number format. Yes, you can also change the number format. Thank you, Siyanga. Now with this, you'll be good to go. And what you realize is that the general sales format and other sales format, they are all the same, 0 cells. The format is the same. So if you are dealing in general sales, where we are having a 16%, I told you yesterday we do not have other sales because any other rates have been harmonized. Now we are only having 16%. And you have the 0 rated sales which are export. You have put them into the CSV. And maybe you have exempt sales, which you have also put them into the CSV. You realize it will be very easy for you to be able to export them from the CSV to what I'm calling this return. Kennedy is asking, is there a way of removing the commas, especially if you're having a very... Yes, the only way to remove is to format the cell in Excel, especially the part of the CU invoice number, so that the numbers when you put in, they do not lose the format. So you can format the cell. Now with this, you can move direct to your general sales, to your general purchases, which becomes very easy. So how do you move to your general purchases? You have a CSV of purchases that you have been able to fill. So the only thing you need to do is to come and also import the CSV of the general purchases. Once you import, it becomes very easy. The return picks the CSV automatically. I think we've seen what has happened. This saves time. The moment, friends, you say you do not want to go this way, you want to key into the return one by one, then it is tedious. You must start this exercise very early. Gladys is asking, how do you format the Excel, Malimo? Have been having these challenges of removing the apostrophe. We will look at it in the Excel. That's why people now in class for advanced Excel, it will be sorted, Gladwell. Now, it becomes easy. At this moment, you are able to proceed on and file your return. But remember, friends, I told you yesterday, when you're filing your return, there are those specific areas that must be at your fingertips way even before you start. Two things that the system will need you to have information about. Number one, if there is a credit from the previous month. And number two, if there was withheld VAT that you will need to be able to complete in the last column. That's why I do say you need to be very careful way even before you start. Straightforward, go and look for those information. Go and look for the information that will be able to give you the credit brought forward from the previous month and the tax withheld. How do you do that? When we were looking at our iTax, when we were looking at our platform here, then the other thing that we needed to check is to be able to reprint withholding VAT. Sorry. So at this moment, if, for example, right now we need to file the VAT for November, if you pick November 2023 and you consult it, it will be able to tell you the amount of VAT, which is 2320, that you will need to be able to claim. So that means you will need to get this information earlier, for you to be able to feed it here and also to pick the credit brought forward from the previous month. Now, the only thing that as accountants we need to know is when we are carrying this credit from the previous month, we don't put it negative, we put it as a positive figure, because the return has been configured in such a manner, when you put it as a positive figure, it removes itself automatically. Someone has asked a question. Okay, it's Gladwell who was saying thank you. And this is the easiest way for us to be able to file our VAT. This is the easiest way for us to be able to file our VAT, especially when we are dealing with employer who is having many transactions. So these CSVs, I have given them out to be shared. I've only left information relevant for us to be able to use as a format, both for the sales and for the purchases. This is how we need to deal with the aspect of VAT. And remember, this is only but VAT. But as far as this employer is concerned, we had an aspect of pay as you earn. We had an aspect of income tax. So that tells us that you need to understand pay as you earn. When are you supposed to be filing? And what are the relevant returns that are needed? The good thing with pay as you earn, you will have a payroll. So you will format your payroll and put in the figures as you need, which is very okay. Remember, you need, once you have checked the obligation, if you found your employer is having a turnover of obligation, it is your responsibility as an accountant to be able to know when do you file this turnover. If your employer is subject to income tax, you need to know, when do I pay income tax? When do I file income tax? Could we be having aspects of installment tax? Because at the end of the day, the employer will not tell you to do this. He has hired you as an expert, you have a CPA, and is expecting that you'll be able to give him the right information. As far as our tax positions are concerned, friends, I want to tell you, this is not everything. This is not everything. There is a level of communication of this tax now to the owners of the company. And this is also critical. That's why I said aspect of managing relationship is critical. Remember, the moment you discuss the information of paying tax to your employer might be a good employer, a good taxpayer who complies. And therefore, when you communicate, the employer pays as required. There are those of us who have been employed by employers. It's harsh to call them shrewd, but employers who do not want to comply. They would want to pay what they want. But at the end of the day, when there is a compliance check, then the same employer points his fingers at you or points her fingers at you that this is the information that I was given by the accountant. So what happens at the end of the day? You get fired over decisions that you never made. The decisions were made by someone else. But because you were the source of the information, even if the information was later distorted, you get penalized. So as an accountant, we normally advise one another, make sure there is always a communication between you as the accountant and the employer as far as the tax issues are concerned. Your responsibility is to make sure computation of tax is accurate and make sure you communicate to your employer. There are those of us who have a formal way we normally communicate with our employers, and we do it through emails. And the employers are good to give feedback on emails. There are some of us who have employers that even can take a year, they have never sent us an email. An employer will only send you a text message, or he will just call you and tell you this is what I need to be done. If there is anything, maybe for application of a tax, he only called you in his office or in her office and said, this is what I want to be done. Remember, because you are the author of this information, kindly always be making sure, even if it's through a text message or it's through a WhatsApp, that please, the VAT liability for November 2023 is this and this. When he tells you pay less than that, pay, and then tell him, sir, I have paid this and this as per your advice. And always make sure this information is copied from your text message, it's copied from your WhatsApp, and it's always kept elsewhere. It will be in a Word document or in an Excel document for future references. So when things get haywire, as an accountant, you have a recourse. You have a document you can go print and tell your employer, remember, I computed this amount and you told me you only want to pay this, and this is the communication. And that's what I did. What I mean is, as an accountant, it's not just competence alone. Workplace has a lot of politics. Workplace has a lot of things, left, center, right. So relationship management and navigation through political environment is also critical for you to be successful as an accountant. So make sure you deal with the issues of tax effectively. Identify the tax obligation, not the historical tax issues as your employer is concerned. If they are bad, communicate to him. Compute the right tax and remit them on time. And make sure you communicate to your employer in any format. The issue here is communication. Is there any question? This applies to pay as you earn. This applies to all taxes that I've mentioned. Any question before I move on to a totally different thing? Any question? Seems we are good to go. Is this relevant to us as accountants? I need feedback. Is what I'm talking relevant to us as accountants? Thank you. So us as accountants, let's do the right thing. At times, we are under pressure. At times, we inherit sins that are not ours. At times, we get penalized for what is not our wrong. So it's good we be vigilant for us to be able to navigate through. Fine. Having finished, Charles is asking what happens next after importing CSV file for sales and purchases. Charles, after importing the CSV for sales and purchases, the return normally tells you go forward, requesting you to complete other elements that are in the return. So you need to go sheet by sheet, completing other elements that are in the return until the last sheet. The last sheet is the one that I said way before even you start. There are two critical information that will be needed in the last sheet. You would rather get them up front. That is, if there is a credit carried forward from the previous period, and alternatively, if you have also VAT withheld that you can trace in the system, these two will be needed in the last sheet. Yes, we can go through. Okay, so you have your purchases, general, other related purchases. As for now, they are not there. That's why you can see here they are talking of 8%. Why? Because way before the Finance Act of 2023, when we were buying fuel at 8%, this is where we used to file our VAT for fuel. But now it's not there. In fact, in the new returns, I think this section has been removed. Zero-rated purchases. If you have zero-rated purchases, this is where you need to put them. If you have exempt purchases, this is where you need to put them. If you have imported services, this is where you need to put them. As far as we are concerned, most of us, our return will end us up here. It will require our output VAT. It will require our input VAT. Our output VAT came from the sales, the one that was in the CSV. Our input VAT came from the purchases, the one that was in the CSV. Then in the system will request you to be able to also put credit brought forward from the previous year. Here they have written zero because last month they paid. But if there was a negative VAT, which is a credit carried forward from the previous month, then we would have put it here as a positive figure. And then here we would have included VAT credit in terms of withholding taxes that we can see in the system. Someone is asking, CSV stands for what? CSV is a format of Excel. It is the normal Excel. You can open Excel. When you open Excel, let me open a normal Excel so that you can see. This is the normal Excel. Now, this normal Excel is the same Excel. The only difference is the CSV is the normal Excel saved as a CSV. Now, we have a CSV, this format. We have a CSV, this format. But for the purposes of the return for filing VAT, the Excel CSV that is compatible to the return is the CSV, comma, the eliminate. So when you save it in that format, then you have saved it as a CSV. So CSV is just a word that I was using, but I meant the format of Excel that is compatible with the return. All right. Do we have any other question? Do we have any other question? All right, all right, all right, all right. Now, I have made the world a bit easier in terms of filing our VAT and in terms of filing our withholding tax and also in terms of filing our pay as you earn. The only thing we need information and earlier preparation. So with this, I would kindly request you give me 2 to 3 minutes pause. Then now we can move to another section for the next 1 hour to deal with cost of sales and expenses. Remember yesterday, we were dealing with revenue recognition as per IFRS 15. Revenue recognition from contracts with customers. But that does not complete our income statement, because when we dealt with revenue recognition, we also digressed a little bit to handle the aspect of tax that is related to revenue. And the reason is because we are dealing with practical accountants. We want to make it more practical. Now, in our next session of 1 hour, we will be dealing with the aspect of cost of sales together with expenses. How do we handle the cost of sales? How do we handle the expenses? What is the cost of sales? Then from there, we'll be able to close it up after 1 hour. But for now, give me a break of 3 to 5 minutes, then I come back. Yes, administrator, this unit has the notes. The notes yesterday of IFRS 15, I've submitted them. And I promised yesterday that I will provide the 2 CSVs for the purchase and sales. I've submitted, they will be shared. And also, I'm also going to submit a template on the withholding tax from Aura and Company. They will be shared in the portal, that portal which we are calling Practical Bookkeeping. That's where they will be shared. And a PDF document prepared from Aura and Company concerning the withholding taxes, that everyone who is an accountant here may know what are the withholding taxes that you're supposed to note, and the changes in the withholding taxes that were instituted in the Finance Act of 2023. They will be in that document. They will be submitted today. They will be submitted today. Administrator, they will be submitted today. All right, so give me 3 to 5 minutes for a pause, then I will be back. All right, we can proceed on. We can now proceed on. Two more things that I wanted us to have a look at. Two more things. Number one, I wanted us to have a look at the cost of sales. And number two, I wanted us to have a look at our expenses. As accountants, we are expected to account for these two things in our accounting system. So by now, we have stopped our manual system, and now we want to deal with our accounting system. How do we recognize cost of sales in our accounting system? Now, when we want to recognize our cost of sales in our accounting system, one thing that is very critical that as accountants we must be able to understand is we must understand the operations of our employer. Our employer is likely, maybe he's selling goods, or alternatively, our employer is only providing services. In this case, the recognition of the cost of sales is a bit different if we are dealing with these two guys. Why? When we are dealing with selling of goods, either our employer is buying and he sells, or alternatively, our employer manufactures these goods. There is an aspect that comes into play that differentiates this one from this, and that is what we call inventory. So in a situation where we have an employer has hired me, or an employer has hired you, and you realize that the employer is buying and selling goods, then you need to understand that there is an aspect of inventory that you must always put into consideration. Now, when the issue of inventory comes into play, then you must realize two things. There will be an aspect of IFRS, and there will also be an aspect of tax, which you must be careful with as an accountant. An aspect of IFRS, how? When we are dealing with inventory, then we need to know that our IAS 2 must come into play. How do we recognize our revenue, our inventory, into the books of accounts? So it tells us that as students of RCM who graduated and have understood what IAS2 requires, you need to deploy this IAS2 into the management of your inventory. That is just but another case scenario. But the ideal case scenario is, the first case scenario is, how are you going to handle your inventory? Here, I don't want to be very academic. I want to be very practical so that it can be beneficial to us. Now, if you are running QuickBooks or if you are running Tally, I want to use this example. Assume you are running QuickBooks or assume you are running Tally. Two things will be needed. Either you will find an employer who has an inventory system separate from the accounting system. It is possible. So when you get hired, sorry, let me see. Who can see your message? Recording on. All right. So what I was saying is, it is possible when you get hired as an accountant and you are studying the model of your employer, you realize your employer has a different inventory system separate from the accounting system. It is possible that your employer has only one system, which is an accounting system, and at the same time, it's also running inventory. It is possible that if this accounting system is running inventory, this inventory is only bought and sold. And it's possible that if it's running an inventory system in the accounting system, the inventory is manufactured and finally sold. So what is the way forward? In a scenario where the inventory is bought and sold, if it is QuickBooks, it's easier to handle in the accounting system. Why? Because these goods that you are buying, you will put them into the system as purchases, and then when you are disposing them, you highlight the stock that you had bought and you sell. So when you look at the inventory ledger, whatever remains, that's what you will be concerned with. In terms of stock count, it becomes very easy. But in a scenario where the goods are manufactured, meaning inside your accounting system, you need a manufacturing profit and loss account. Prior to moving to the trading account, then you must be very careful. A system, for example, QuickBooks, will give you a lot of challenges. Why? Because you are running two accounts in one system. You are running a manufacturing account, that is the cost perspective, and at the same time, you are running a trading account inside the same system. In some scenario, to have good results, that's why some employer will have a different system outside to run inventory for the purposes of trading the manufacturing part. And then the components of the result is what's brought into the accounting system as QuickBooks. What I mean here is this, friends. When you want to account for the cost of sales, one thing that you must be aware is you must study your employer and understand what does he deal with. If it's only dealing with the buying of goods and selling, then you have to know it is easier for you to be able to incorporate it into the accounting system. But if it's in the process of manufacturing, then it will give you headache. As an accountant, then you need to make a decision on running this inventory outside so that your accounting system is only running the trading account. Similarly, if it is tally, if at all you are just buying and selling, tally becomes so good because you will only recognize purchases. And when you look at the display of its ledger, of its inventory ledger, it will just tell you have bought this quantity, and it will tell you are selling this quantity. The net quantity that it will reflect, that's what you do the stock take. But the moment it becomes manufacture, it becomes also a challenge. So as accountants, when we have moved on and we have gotten employment, we need to understand how our employer is operating as number one. Now, this basic of understanding how the employer is operating will now take us to the next level, where now we incorporate in IFRS, which in this case, I'm saying IS 2. A scenario where you want to use a standard, but the basic double entry, you are unable, it will give you wrong results, it will give you misleading results. Basic number one, get it right at the point of double entry. You can account for your goods. This is how much we manufactured at this cost. Then we have transferred them to this. This is how much we bought, and this is how much we have sold. Way before you even think about what? About IFRS. The structure of our accounting system itself is very critical. Let me tell you, friends, it defeats every logic. You are an accountant and you do not understand the components of your cost of sales. You do not know. Having moved from a class of CPA, then you need to know the components of costs so that any other person who looks at your figures and you tell him these are the component of costs, he will feel you understand what you are doing. So it is not mechanics. It's first of all the basic knowledge that we need as accountants. Him who is employed in a company that is dealing in goods, his approach with him who is employed in a company that is dealing with services are different. Him who is dealing with goods has inventory, but him who is dealing in services doesn't have inventory, he's only dealing with direct costs. So it is the responsibility of you as an accountant to be able to understand what are my direct costs for me to be able to get the cost of goods, which we are calling the direct costs. I hope I'm making sense. Now, how do we move on as accountants? Sometimes you find accountants are making mistakes. Which mistakes? You realize the components of cost of sales in 2012, in 2022 are different from the component of costs in 2023. And they are different from the component of costs in 2024. So when this person exports the same cost of sales ledger into Excel, and he matches this is 2022, this is 2023, this is 2024, then you realize this expense features here, here it does not feature, here it features, this expense is here, and it's here, and it's missing here. Why? The reason is because the accountant has not sat down and asked himself, how do I get the components of the cost of sales? So where is the problem? The problem is the accountant, first of all, needs to sit down and come up with the component of the cost of sales. If they are direct costs, he needs to have the components of the direct costs. Charles, you're asking me to add opening stock, add carriage inwards, add purchases, less closing stock, less returned inwards. Sawa, Charles. But what you are telling me now, it is taking us to the academic perspective. Now, let me use the information, Charles, you are telling me about to add all those 5 into a practical scenario so that it doesn't look academic the way it is. What happens in the real world? In the real world, when you buy, you carry those goods to your workplace. When you carry those goods to your workplace, then you sit down and you compute yourself, what was the cost of these goods when I bought from my customer, from my supplier? How much did I incur in terms of transport to this place? If, for example, they were bought outside this country, you will also ask yourself, was there an insurance on the way until these goods arrived here? The answer is yes. So that tells me from the point of the supplier all the way to where I am working today, for these goods to arrive here today, the cost it has involved me is the purchase plus insurance plus carriage up to this place. Now that makes the cost of my purchase. In academics in class, they will tell you opening stock, add purchase, less carriage inwards, all those things. But in practicals in the office, that will be the cost of you bringing your goods up to the place and location for the goods to be sold. Now, it's at this point when you have taken your purchase, which is X, you have added carriage inwards, which is X, maybe there is insurance, you get a cost, assume it is 5 million. It is at this point of you have gotten the 5 million that you divide by the units if they are 100 to get the cost per unit was maybe 50,000. For you to say, for me to bring my 50,000 units to this, for me to bring my 100 unit to this place, each unit has costed me 50,000. Then you ask yourself, then what profit do I need to make? Then you say you add a profit of maybe 25% or 30%. Now the issue here is, again, where do you get the 25? Where do you get 30? That is an issue that accountant you need to ask yourself. You do not just sit and you say this is 25 and this is that. No, you will have missed it as an accountant. This is what I wanted to say. Allow me go back a little bit. Digress to go back to where I was so that I can be able to come back to this case of the 25 and 30. As an accountant, there must be a reference. There must be a reference as to what is your cost of sales. Where is this reference? The reference must come all the way from a document we normally call the procedure manual. So as an accountant, when you employed in a company, one of the things that you need to analyze, it's not just sitting on the machine and you're selling. You must ask yourself, what are the components of the cost of sales? Is there any place I can refer the component of cost of sales? When you realize there's no place you can refer to get the components of the cost of sales, then there is a bigger problem. The problem is not the components of the cost of sales. The problem is the non-existence of the procedure manual. That's why it needs to be fixed first. Why? It is in the procedure manual that you need to look at the finance section to be able to know that as this company, who is your employer X, is concerned, the cost of sales will include purchase, carriage inwards, insurance, and any other components. It will be stated there. And they will not just say that. And they will say, for any purchase, it will be classified under code number 100. For any carriage, it will be classified under code number 200. For any insurance, assume this is 100 and 150. For any insurance, it will be classified under code number 170. What do I mean? I mean, it tells you that the cost of sales is having its code under 100. So that as you move on, if you have any other item that is an exception but it falls under cost of sales, it is easier for you to classify it at this point. This information, you should not think it should come from what I'm saying, the procedure manual. If there is no procedure manual, then what do you need to do? Then as an accountant who has passed through the hands of RCM, you need to understand how a procedure manual is documented. Your main concern is not about the administrative part, but your main concern is about the finance part. You want to make your work easier. So once you sort out this aspect, then it will move all the way to here. So when you move from this level, coming into the accounting system, whether it's QuickBooks, Sage, or Tally, you put in this figure. So whoever wants to understand what is the cost of sales, he will just click 100. Whoever wants to know what is insurance, he will just click 150. That is how an accountant adds value to his workplace. Someone is asking, what of storage costs? What of storage costs? This is Tobias. Now, This is what I'm saying, Tobias. Your storage cost might be different from mine. Once you are able to understand what your employer is dealing with, and you sit down to critically analyze how he's doing his transactions, you will easily know where to put what transactions. Remember, the problem with us as accountant is we want to make big things even where we only need to do small things. We want to bring in IFRS, yet in reality, even the basic double entry hatuelewi. So the first thing is, let us first sit down and ask ourselves, this employee of mine, what is he doing? He is only buying and selling laptops. Simple as that. Or he's buying and selling computers. He's buying and selling electronics. So what do? You only need to know what was the purchase price and how much you carried to this place. It's as simple as that. Then from there, you can move on step by step. So you will just say, I want my accounting system to be in such a manner when an external person looks at the accounting system, it makes sense. And me, who is an accountant in this company that buys and sells electronics, when he goes to another company that does the same thing, he will see there is a relationship between what I have done and what the other accountant has done. At least there is a relationship. Now, as far as the cost of sales are concerned, if we are dealing with products, there is an aspect what I'm calling the profit margin. The profit margins don't just come from anywhere. No, the profit margin don't just come from anywhere. They could come from anywhere because of the realities of our employers. At times, our employers are people who solicited for capital and they started business. They never had what we are calling a business plan. So when you get employed, the reality tells you this employer did not have a business plan. He just started by importing computers and selling a laptop at 50,000. So in reality is he understands the selling price is at 50,000. So what is the value of us as accountants? The value of us as accountants, therefore, becomes one, computing the cost of sales, comparing with the profit, and asking ourselves, are we in profit or not? This profit would be a gross profit, or at the same time, it will be a net profit. It's your responsibility as an accountant. So how will you then move? How will you know if it's a gross profit or if it is a net profit? You must be able to identify what is the cost of sale. Is there any question? Now, in our accounting system, at times, what we have in the system, we normally call it the cost of sales. But in reality, it is not the cost of sales. It is what? It is purchases. In reality, it is not the cost of sales. It's the, and let me show you now how. When I buy my goods and I put it in QuickBooks, QuickBooks is designed in such a manner, it is showing me cost of sales. But in reality, what I have put in a purchase of 1,000 units at 50, giving me 50,000. But the configuration of QuickBooks reads what? Cost of sales. So at the end of the year, way before another third party looks at my information that is in the system, what I am having, I am having in the system cost of sales, but I'm saying it is purchases. Why? Because I have not yet factored the issue of opening stock and closing stock. And that's why when you look at the financial statement, you realize their cost of sales and together with your cost of sales are different. Why? Because in the financial statement, they incorporated in opening stock and purchases. So when they incorporate in opening stock and purchases, then in your system, you also need to incorporate it in two ways. Either you bring in the opening stock and also closing stock, or alternatively, you bring in what is called stock adjustment. And stock adjustment is the difference between the opening stock and the closing stock, so that you can be able to get the correct cost of sales. Even if it is tally, once you buy and you put the invoice into the system, it will show you how much purchases you have. When you sell, it will show you the net purchases that you have. But remember, that's not the cost of sales. Why? For you to get the cost of sales, you must recognize the opening stock and the closing stock. All right. Key thing is, are we able to understand what our employers are doing? If our employer is in the business of provision of services, now he's no longer selling any goods, he's only dealing in the provision of services. Me as the accountant, I must be able to understand what are the direct costs related to generating revenue. Without incurring these costs, I cannot be able to realize my revenue. And I can give examples. If I'm an accountant of a transport company, assume this is Easy Coach, and I am the accountant, then I need to understand that my salary as an accountant is an expense. But the salary of a driver is a cost of sale. Why? The driver can take this vehicle, go to Mombasa and come back without me. So for me to realize revenue up, it's a must, I must pay the driver. It is a direct cost. But it's not a must to pay an accountant, who is me, for the driver to be able to go on the road. It is a must for the vehicle to be repaired for me to realize revenue. But it's not a must for me to be able to pay electricity for the vehicle to go on the road. So in this case, me as an accountant, I must sit down and ask myself, what are the direct costs? Once I've identified what are my direct costs, then what do? I now go into what I'm calling the chart of accounts, which I said it has to be reflected in the procedure manual. If it is not in the procedure manual and I do not have time, let me make a formal chart of accounts and I have it discussed and approved. That is how my chart of accounts will be. This will be the components of my cost of sales. This will be the components of my purchases. This will be the components of my expenses. So that when you look at my accounting system in 2020, 2021, 2022, 2023, going forward, they are all resembling one another. All right. The other thing that we need to understand as accountants is, at what point do we post our transactions? Our posting of transactions needs to be done when our data is supported. The aspect of being supported depends on you as the accountant. You know, when you have an invoice, do you have a mechanism where this invoice has a delivery note or no? Do you have scenarios where you do not make payment unless a payment voucher has been raised or no? What I mean is, as an accountant, you must sit down and ask yourself, how can you have a strong internal control system in as far as posting of transactions into the system are concerned? If you do not understand how to have a strong internal control system, you exchange notes with friends you are with in RCM or elsewhere, or you consult from other people who understand these things to help be able to build up a strong internal control system. Any question? If there's any question, kindly allow me respond to it. Is there any question? Are we okay? All right. All right. Now, once we have been able to set up our chart of accounts and it's well, we are capturing our information well into the system. There is the last part. I'm just dealing with the income statement. There is the last part that now we are required as accountants to do. And that is what I'm calling reporting. When it comes to reporting, some of us are accountants in structured organizations where reports are needed at intervals and the intervals have been set. We have some of us who are in organizations that are not structured. Reports can be required anytime. This is what I wanted to say. As an accountant, give yourself targets that by every 5th of the following month, you have closed your books of accounts. What do I mean? Mohammed is asking, Mwalimu, take us through chart of accounts, especially in SAP or in Tally. Fine, Mohammed, I'll go back. This is what I was saying. When it comes to reporting, make it design for yourself a scenario where you give yourself deadlines to close the books of accounts on a monthly basis. On a monthly basis. However, reality is, if you want to close your books of accounts on a monthly basis and you want to close them after the month has closed, you will never close. That's why some accountants reach on 15th of the following month, they have not yet completed the reconciliation of the previous month. What do? We have been there. Always make sure, if you want to have a happy time, if you want to have easy time, always make sure all transactions that have been done through bank accounts. It could be US dollars, it could be Kenya shillings, it could be euro. Make sure all transactions that have gone through the bank accounts are posted on a daily basis. If not, at least once every 2 days. You will be safe. Forget about many things. You know, invoicing is mandatory. So you as an accountant, invoicing is mandatory and you'll be under pressure to make sure that the invoices are out. But you have to give yourself another pressure to make sure that payments done through the bank, are always posted. By the end of the week, all the payments are done. How do you do it? At least access the bank statement every Wednesday or every Thursday. I'm giving those 2 days so that if you access it on Wednesday, Thursday and Friday, you can be able to post. Then on Monday, Tuesday, Wednesday, you access. At least Thursday and Friday, you can post the transactions that are there. That is number one. Number two, always make sure that you do not make any payment unless the invoice is in the system. Once you become a conqueror of the two, you will always have your end month close process before 50. Why? This is the scenario. If you're dealing with an accounting system, remember you can never sell goods unless you issue an invoice. So meaning for every sale, the invoice is in the system. Number two, you have given yourself a policy. You will never make any payment. No check will be written unless the supplier's invoice is in the system. So meaning all purchases and expenses are posted before payment. And number four, you have made sure that all payments and receipts that are in the bank statement are done on a weekly basis. You access it on Wednesday. You make sure by Thursday and Friday you post at least to be complete. So meaning all receipts and payments are done. So what happens at the end of the month? You only remain with one thing, bank reconciliations. Any other thing that is remaining? To pass depreciation. And then the other thing that's remaining? Adjustments of expenses and incomes that have not been realized. Let me tell you, friends, this will be an easier way for you to be able to complete your transactions on time and reconcile. The only exceptions that will be remaining are three. Bank reconciliation, which you can do. Number two, passing depreciation, which if you have the fixed asset register, you can be able to do within these 5 days. And number three, we have expenses at the end of the month that you do not understand how much it costed. For example, you have electricity, which at the end of the month, you do not have the bill. You must be able to provide a provision. So these three things, you can easily do them within 5 days, complete your reconciliation, close and move to another one. Once you have a mechanism of end month close process that is moving on smoothly, even if it's under pressure, but by the 5th day of the month you can finish, that tells you you will have a good end year close process. So you can be having your reports that can come out, which someone can rely on. They could be monthly, they could be quarterly, or they could even be annually. But let me tell you, as an accountant, if you want to be safe, you want to add bonker points to yourself, always make sure every month you give your employer a report. Tell him this is how much we have sold, these were our costs, this is the profit that we have made. And this is the stock that is still available, we have not sold. And I have done physical stock take. Let your employer feel, apart from just being seated, he is seeing the way the company is running. And the only way he can see is through reports. Muhammad asked me to take us through. Okay. HP is asking Malimu, what if you are employed in internal audit department and you are told you will mainly be dealing with inventory? How do you start off? Remember, you have only worked as an accountant and not an auditor. All right, all right, all right, all right. Now, all right. HP, you have deviated us a bit from accounting to audit, which we will address. Yes, we will address. But let us finish the accounting bit. Now, as an accountant, as reporting is concerned, you will be required to produce what is called management reports. Management reports. The question that an accountant needs to ask himself, when I'm asked to generate management reports, what are they? What are they? Management reports could be one, simple system-generated reports. And number two, they could also be complex financial statements. Both are management reports. This is what I mean. At times, your employer tells you kindly, we need to discuss the performance of the company. Or maybe there are frequent meetings that are always held every Friday, every Monday, and there is a report that is required from the accounting department. That means you can no longer be able to complete complex reports because the duration is small. What is required is a simple system-generated report. What do I mean by a simple system-generated report? You need an income statement from the system. Number two, you need a balance sheet from the system. And number three, you also need the aging analysis of both payables and receivables. These three is a short form of you being able to discuss the management reports. And remember, if you do not have a mechanism to have your end-month close process properly, then it means these management reports that you are extracting to be discussed in the meeting cannot be relied upon. You will always be prompted to work out things in Excel outside the system. Hide, I will update the system. Work from outside, I'll update the system. When you reach at a scenario where you are headed to the meeting, but you must call someone in marketing and ask him, by the way, mtu fulani nani ajalipa? Fulani alilipa? Na mtu fulani ajalipwa? Then realize there is a problem. Why? Because this information must come from the system. And this information can only be reliable if you are able to do your end week close process and end month close process well. So that when you generate your income statement, whatever is of interest here is the profit. When you generate your balance sheet, whatever people are interested so much with this is the balance of the receivable and the payable. And that's why you must attach the aging analysis, the balance of the receivable and payable, and also the bank balance. And that's why you must attach the aging analysis of the two guys. Why? So that the people responsible on sales and in credit can be able to look for the money. And two, so that even us in finance, we can understand we have core suppliers that we must meet obligations, so that we can see how do we balance our core suppliers if at all we do not have enough liquidity. That's why it's necessary that your system runs well, having simple system-generated reports. Apart from system-generated reports that are simple, there is also a level where you are required to have a complex financial statement acting as a management report. That means you have your income statement, you have your balance sheet, you have your statement of changes in equity, you have your cash flow, and you also have your notes. All this in compliance with IFRS. This is required, and in scenarios where maybe borrowing is required, or number two, during the audit process. And that's why we tell people, if you have passed through the hands of RCM as a good accountant, kindly don't be submitting a trial balance alone to the auditor. Provide this. Show the auditors that you know what is required of you as an accountant. That is as far as reporting is concerned. Now, the moment you realize that the point of end month close process is okay, you have grasped it well, and you have realized that the process of generating simple system-generated management reports is okay, you are comfortable with it, and also generating complex financial statements, then remember that you will be moving from the positions of just being an accountant. You are now headed to being a finance manager. Now, someone has asked me if a cash flow statement is part of the management report. The answer is yes, and very, very much yes. You know, the challenge we are having is in our class, once we talk about cash flow statement, we have that mechanical way. We have that mechanical way of looking at the previous balance sheet and the current balance sheet. We can subtract receivables, we can disallow depreciation, we can look at the interest and play around the finance costs, and our cash flow can balance. That's what happens in academic in class when we are doing CPA. But the challenge we have is we do not understand how to interpret the cash flow. Once we are able to interpret the cash flow very well, then you realize that the cash flow is a very critical, important document as far as management reports are concerned. HP asked about transiting from accountancy to audit. Now, HP, if you're transiting from accounting to audit, then you will need to be briefed a little bit to understand the responsibilities of the auditor. And specifically in this case, the internal auditor. Very different from accountant. So this is a topic of another day, a discussion of another day on what auditors are supposed to do, especially internal auditors. And for us who are here and are internal auditors, maybe when that circumstances will be found, we'll also discuss how do we work well as internal auditors without compromising our independence, but at the same time, working in harmony with other departments without necessarily being seen to be witch-handing anybody. What I initially said, relationship management. All right. Having said that, I've tackled, I think, enough. I've tackled enough. If there is any question, kindly let me know so that I respond to it. Otherwise, I've done it for 2 hours. I feel I will need a break. We'll pick it up from there next time. I've shared the notes out. The notes that are not there are the notes for the cost of sales, expenses. Those ones I'll work on it, but the rest from yesterday up to today tax, they are complete. They will be shared on that portal. So the ones for today, I'll be able to work around something, then I'll be able to share. Any question? What about course outline? Charles, this is not academic. This was a practical course for accountants. See, accountants now, we are in the field, we are playing. We are the real players in the field. We know the rules of the game. Now we need to know where are we not doing well and how can we do it. So we cannot have a structured program, but if you need one, we can work out on something. Okay, fine. That's fine, Charles. That will be provided. Areas to be covered. Initially, we have done revenue, cost of sales. We have also done expenses. We are doing reporting. We are also doing tax. All these were just part of the income statement. We have not dealt anything as balance sheet is concerned. So as balance sheet is concerned, we are going to look at how do we run our PPE based on IAS 16. How are we going to be recognizing our receivables? And even going ahead to provide impairment as by IFRS 9. How are we going to deal with our payables? How are we going to deal with our loans? And these loans, we have loans that are local from banks. Some of us are employed with directors who are coming outside the country. How do we handle those loans? All this will be in the balance sheet. Yes, we'll have it on the WhatsApp. Mohammed is asking if we can have practical aspect of public sector accounting. Fine. Public sector accounting. It's okay, that is not it. All right, so all these things that we've done from yesterday up to today, they are all within the income statement. We have not yet dealt with the balance sheet. So we still have some time to go to deal with the balance sheet and complete everything, so that we can also have a look. When we look at PPE, we can look at how do we set our fixed asset register? How do we classify our assets? How do we depreciate them? How do we bring the depreciation into the system? How do we replace the assets? So we still have some way to go. But for now, I think we can stop at that point. Thank you so much for listening to me. Unless there's someone else who would want to ask a question. Charles, I will share my number too. I'll share my number on the paid up WhatsApp. All right. Otherwise, friends, it's 2 hours. I'm grateful. I want to say thank you so much for listening to me. Let's meet next time when we now embark to the balance sheet items. Thank you.